Hi, welcome to T-Minus Retirement, the podcast where we help launch your retirement into orbit. I'm Jay Cole.
And I'm Dustin Watts.
And today we're going to be talking about everyone's favorite topic, news and politics. More specifically though, how to not let news and politics affect just your current financial state and maybe how to handle it maybe through just some volatile times within the news and politics.
Yeah, and we're going to look at it from three different aspects: from your investments, from a tax perspective, and then just your overall quality of life. So we'll start off with the investment side, and this is something that we deal with quite a bit, but today's news cycle, we all know, news and politics cycle, it just comes and goes so quickly. It's so sensationalized that it really captures people emotionally. And unfortunately, some people tend to act on those emotions with their investments. They view that as a way to, kind of express their feelings towards a particular event, particular political situation. And we have so much data, and we'll get into a little bit of it later, but so much data that goes back that shows that is just the complete wrong way to approach investments. These news cycles, something that's in the news today might not even be relevant a week later, and yet you go and you sell your whole portfolio and you put it into something, that you think is going to be less affected by whatever is going on today. And then something changes and, that was maybe the wrong decision. And all that is to say is with your investments, we all know the old saying, right? This is a long-term investment. It's a long-term situation that we're investing for. Maybe it's retirement or what have you. We don't let today's news or who the president is or what political news commentator said on a Sunday show, we don't let them or those situations affect our long-term goals. It's just bad practice.
And too, we live in a day and age where we just get we're bombarded with news.
Oh yeah.
And so it's kind of hard just to turn off from that, but we know the market's not turning off from that. And so you might get some radical news or something happening, and it could cause something that looks like it's the end of the world within the market, and then the market just rebounds, or it takes time to digest that news and ends up rebounding from that point.
Yeah.
Right now, as we're filming this, it's February of 2025. I could probably wager that most of you might not remember what happened August of 2024.
Yeah.
And the Bank of Japan decided to raise interest rates and caused the whole short-term volatile downturn within the market. Everyone was saying it was going to be the end of everything.
It was the beginning of the end.
That's what it was.
I had people sending me emails about, it was called the yen carry trade, and nobody even knows what that was sending that really knows what that meant, I'm sure. But it just came and went so quickly, to Jay's point, that if you think back, why was the market down a few percent one Monday in August? And, we look at it now, and where's the market now? It's way higher than that one day that the Japanese, central bank raised interest rates. Mm-hmm. And why am I selling my Google or my Apple stock because of an event like that? It doesn't make sense, yet it causes a very short-term panic typically. Markets might be down big, and you have the news commentators, they got the stock exchange behind them, and they show all the red, and it's like trying to scare you. And you got to take a step back when things like that happen and digest that and say, okay, does that really change what I'm investing for? Does it change any of my investments? Maybe if you were a hedge fund, borrowing currency, Japanese yen, maybe that's a different story, but I don't think 99% of the people are doing that. No. You got to take these things with a grain of salt and understand who's telling you this, and how does it really affect you or not.
Yeah. So we're going to show you some charts next, just more talking more in detail about the markets and specifically politics.
Yeah, and long-term view.
Okay, so what we have here is a couple slides from a fund company called First Trust, and essentially they've just compiled all the data within the markets for the past 75 years and broke it up. If in this slide here specifically, if you were to invest $10,000 back in 1949, if you were just to leave it in the S&P 500, you can see this black line here. That's if you just left it and didn't touch it, regardless of who's in office or who's president. And then you have this red line. That means you would have your money invested only when a Republican was in office. And then likewise, this blue line, the flip side. So if you have that 10,000 or that money invested only when a Democrat is in office. And so we just thought this is a really interesting slide because it shows you if you're playing sides, whether it's Democrat or Republican, you're missing out on a lot of market growth. You might miss out on one extraordinary day out of that year that could have been a 10-15% jump. And you can see here with this black line, if you had just let that 10,000 invested over the course of 75 years, well, by the end of 2024, you would have had almost 4 million. Versus the Democrat and Republican, if you just invested it whenever either one of those were in office, it's not that much. Democrat has more than a Republican, but you're still way off of what it could have been had you not invested based off of emotions or how you feel about whoever's in office.
Well, and to bring a little bit of what we were just talking about the news into this chart, I know it doesn't show it on this chart specifically, but there are charts that do show all the events that have taken place over this black line, right? This goes back to 1949. I mean, think of how many wars we've had. We've had presidents, assassination attempts. We've had global pandemics. We've had currency crises. We've had I could go on and on about all the different events that we've had during this black line. And yes, there's some times where, there's going to be some resets, but the overall trend still is trending up when you're fully invested in a nice, diversified type of portfolio. This is the S&P 500. We have to bet on these companies continuing to improve and bring in the earnings that they have, and that you reap the rewards when you do that.
Just one little side note. This is the 08-09 crisis.
Yeah.
As horrible as that was, you can see it. The rebound was only a couple years.
Yeah.
And then now, this is the COVID crisis here.
Yeah.
But even then.
Yeah. Well, and I believe right here was, the interest rate temper tantrum. And, so you're going to have these checkbacks, and that's okay. But you got to look at the big picture. And again, you got to remember why you're investing. So the next one that we'll look at, this is kind of interesting. So this goes actually back to 1929. So this is the S&P 500 performance 4-year election cycles. Something I wanted to point out is it shows the average return up here in the first, second, third, and fourth year of a president's term. And what you can see is, the third year of a president's term on average is actually the best. There's probably a lot of reasons for that. I mean, maybe they're finally getting things worked out the way they wanted it. Not entirely sure, but that's just something to keep in mind. But you can go back and see, okay, look at all these different years. That was the Great Depression. There's a lot more up bars than there are down bars. Mm-hmm. And actually, if you read this little box here, down observations, so 73% of the time, positive performance is observed when during the S&P 500 returns over that time period. Total return over a 4-year period was on average 46%, and you can see how much lower it is if you just take sides, like Jay was saying, Republican or Democrat. It's quite a bit lower. So you need to remain invested. This is 92 years right here that we're looking at of history. That proves a pretty good point.
Yeah.
The next one we wanted to show you. So I know there's a lot going on here, but we always get questions. So-and-so's in office. There's whatever party controls the Senate or Congress. How is that going to relate to the market? And shouldn't we be in this area more than another area based upon who's in office? And here's all I wanted to point out. If we look at the last two cycles of data that we have, in 2017, we had an all Republican sweep. 2021, we had an all Democratic sweep. And I think we all can, it's safe to assume that everybody would be understanding that they would say Republicans, the energy sector would do better. Democrats, the energy sector would do worse. I caution you to make bets like that depending on who is in office, because we can even see just recent history. The energy sector under an all Republican controlled Congress and White House was the second worst performer in 2017. I don't think many people know that. And actually, it's not on this chart, but solar companies were one of the best performers in 2017. On the flip side of that, 2021, energy was the best performer under an all Democratic sweep. So not everything lines up with how you might think. You need to have a diversified portfolio. You need to really stick out for the long run and not make a big bet based upon politics. It's a really hard thing to figure out.
Yeah. Okay, so next we're going to talk about not allowing the news or politics to affect you and how you make tax-related decisions. I've had a lot of conversations with people over the years, and I've heard it on both sides. And I've heard either people maybe that just are totally against the government, maybe even against the IRS, make bold statements about how they're just going to go completely exempt on their paychecks, or even if they're self-employed, just not pay any taxes at all, just to kind of stick it to the government. Don't recommend that.
It's bitten people.
It's bitten people so many times. I mean, not only are you going to have to worry about paying interest on whatever your total tax bill will be, because there will be a tax bill, but on top of that, you're going to have massive penalties for not having the proper amount of withholding paid in, or estimates paid in. So just because you might hate the IRS or hate whoever's in office right now, I would never recommend making a bold statement like that. That's going to cause a pretty big headache to you that you just don't want to deal with. So definitely don't recommend that. Kind of on the flip side too, I never would recommend cashing out all your investments if you're just so fearful of whatever's going on in the market. This could be 401ks or retirement accounts. Obviously, if you cash all that out, that's going to cause a very unnecessary tax burden, especially if it's a very large account. And if you're pre-59 and a half, penalties on top of that for doing it early. But also with brokerage accounts, I mean, let's say you have a 30% loss just because it's whatever's going on in the news cycle. Well, if you just sell everything and cash it out, you can't write off that whole loss. You can only take up to $3,000 a year, and hopefully you might have some gains down the road that you can use to offset that loss. But I mean, it's kind of sad that you can't write off a 30%, 40, whatever, 50% loss, just because you're scared of however's going on in the market. Well,
we saw that too. Like a good example would be COVID. That happened so quick. It was just really, we saw the most volatility in March of 2020. I mean, within like 2 weeks of March, the market's down 35%, and people are either cashing out 401ks, cashing out brokerage accounts, and then turn around a couple months. I mean, the market was up in 2020, even after that. So it never allowed people to even get back into the market. They have all these tax issues to now deal with, and now they're probably in a worse off, state, overall state than they would have been if they would have just kind of let things alone and let things play out.
Yeah, exactly.
Realize the bigger picture.
And you never want to make decisions based off of what's being talked about at the moment. There's that good saying, never count your chickens before they're hatched. Again, as of February of 2025, I'm getting a lot of questions being asked of, will my Social Security not be taxed going forward?
Yeah.
That's kind of being thrown around a lot. Trump definitely kind of talked about that during the campaign trail. And some that might be having taxes withheld, they're wanting just to stop that completely because they might think that, hey, this might be tax-free. I don't have to worry about that. Again, that as of February of 2025, that's not law yet. Nothing was passed, nothing was signed. So you don't want to make decisions based off of what ifs. All that stuff could sound nice, but you definitely want to wait until the deed has been done and talk with your tax advisor to see how to plan for that accordingly.
Yeah, because you don't even know if it's going to be for 2025.
Exactly.
Right? Because they do that all the time where this whole bill doesn't get done till the end of the year. Well, it doesn't always mean that it's going to be retroactive. I mean, there's just so many things that get cut, onto the floor there. You don't make changes until it's, written in stone, and that can really derail you.
Yeah. Well, the last topic we wanted to talk about, just don't allow the news or politics to affect your quality of life.
Yeah.
I think that's a big one because that can cause so much unnecessary stress, even health issues. If you're so fixated on just market news, political news, and again, in this day and age, we're bombarded with it constantly, and it's kind of hard to take a break. But I would just recommend, if that's something that you're struggling with, maybe just turn off the news, take a step back, and just have a good, healthy detox. Focus on things that you can control within your life. Whether it be your family, your own actual surrounding things that you can control. I would say focus more time on that rather than just on big picture things that maybe doesn't even affect you at the end of the day.
What I do is I've turned my notifications for news apps, even stock apps. I don't get pinged all the time with this news, that news. It's like all trying to grab your attention, get you to click on that. It's like if I want to go read the news or go look at some specific stock market news, I will go to the app or I will go to the website. I don't need them to ping me. I think that brings the stress level way down. So that's good advice. And sometimes I tell people when they're really kind of up in arms about something, it's like, go take a walk. Go walk your dog. Go get away from that situation, because nobody makes good decisions when they're emotional and a panic. That's when you make your worst decisions. Yeah. So you really need to do all those things, all that you can to prevent that, because you don't want one decision like what's going on in today's world to affect your retirement or your investment account that's really planned for 10 years later. You need to keep all these things in check and remain emotionally healthy too.
Yeah.
We hope that you found some value in this. If you did, please like and subscribe. We look forward to seeing you guys in the next video. Take care.
Take care.